Hello and welcome to the third video of the webinar. This video will discuss in detail the subsidy or incentive provided under the scheme. We will also look at case studies to bring clarity in understanding. I request you to keep a pen and paper ready to make notes. Also, feel free to pause the video to understand the slide better. Having said that, let us begin. All units that have previously got a subsidy under NEIDS or NEIPP or NEIP are considered as existing units. In this webinar, we will discuss only new units. For any clarification or assistance needed as an existing unit, please reach out to us on the number given in the ticker, or you can write to us at contact@unnatif.org. We will guide you on how to avail subsidy under this scheme. The scheme has divided districts in the Northeast either as advanced or as backward. For example, in Sikkim, two districts, Gangtok and Pakyong, are advanced, and the remaining four districts, Mangan, Namchi, Soreng, and Gyalshing districts are classified backward. Remember, advanced as Zone A and backward as Zone B. There are three major incentives provided under the scheme. They are capital investment incentive is 30% of project cost in Zone A, advanced, and 50% of the project cost in Zone B, backward. Central interest subvention is 3% on interest on loans in Zone A and 5% on interest on loans in Zone B. Manufacturing and services linked incentive is up to 75% of project cost in Zone A and 100% of project cost in Zone B. To understand what is project cost and how you can finance the project as per the scheme, let us look at this slide. One can completely self-finance the project without taking a loan, but you can't claim central interest subvention incentive. If you are going to take a loan, then project cost is equal to the sum of the loan and your contribution in the project. Although this is a basic concept, a lot of people had this doubt. I request you to please make a note of what project cost means. Let us look at the first incentive, the capital investment subsidy, and some case studies regarding this incentive. If you are a manufacturing or services in the sector, you get 30% of project cost up to 5 crore in Zone A and 50% of project cost up to 7.5 crore in Zone B. Let us understand this with a few examples. In this case, loan is 5 crore and self-contribution or promoter contribution is 50 lakhs. Project cost is the sum of these two, which is 5.5 crore. For Zone A, it comes to 1.65 crore at 30%. And for Zone B, it comes to 2.75 crore at 50%. To understand upper limits, let us take this case study. Loan is 15 crore and promoter contribution is 2 crore. Therefore, total project cost is 17 crore. For Zone A, even though 30% is 5.1 crore, the subsidy is at 5 crore only. For Zone B, even though 50% is 8.5 crore, the subsidy is 7.5 crore only. These limits have been set by the scheme. For manufacturing, only plant and machinery cost will be covered by subsidy. Only if the unit has a project cost less than 1 crore and you are an MSME defined micro unit will the cost of construction and cost of plant and machinery be covered under this scheme. I have said this in the previous video as well. As we go to discuss the other incentives, remember that only after you have successfully claim the capital investment incentive, can you claim the other two incentives? Now, central interest subvention is a subsidy incentive on the interest you pay on the loans. For manufacturing and services sector, it is 3% with a limit of 3 years or with a limit of 7 years of loan repayment for zone A and 5% with limit of 7 years of loan repayment for zone B. Let us understand through case studies. For a loan of 5 crore, if we assume interest rate at 10%, total interest one pays over 7 years is 1.97 crore. For zone A, with a 3% interest subvention, the new rate of interest is 7%. So total interest you pay is 1.39 crore and you save 58 lakhs. For zone B, the new rate of interest will be 5% and total interest you pay is 93 lakhs and you save 1.04 crore. This has just been broken down for your understanding, but actually what happens in payment and collection of subsidy, let us understand. It is important to understand while paying the interest, you pay the full interest to the bank. Alright, based on your payments to the bank, you need to make submissions on the Unnati portal, Government of India's portal, to claim your subsidy. What you see as saving, that is 58 lakhs and 1.04 crore that you are seeing over there, becomes the incentive you claim through the scheme. Now, let's take another example. Here the loan amount is 2 crore. We assume the rate of interest at again 10%. Total interest one pays is 79 lakhs over 7 years. For zone A, you can save or claim as subsidy incentive an amount of 25.5 lakhs. And for zone B, you can save or claim as subsidy an amount of 41.6 lakhs. If there is any confusion or doubts, you can reach out to us on the number given, or you can email us at contact@unnatif.org. Now, this incentive is basically a performance linked incentive. Alright. That is, the more business you generate, the more subsidy you can claim. And how do you quantify the business generation? That is through the amount of GST you are going to be paying. The upper limit of incentive is 75% of project cost for zone A and 100% of project cost for zone B, and that eligible value of investment which is defined by the scheme. Now this is adjusted to the input tax credit that you would have claimed already through the GST portal. This scheme or this performance linked subsidy is available for 10 years or up to 2034. Let us look at case studies. In this case, total project cost is 6 crore. Maximum claim for zone A 75% is 4.5 crore minus the input tax credit. Let us say that comes to 4 crore. Spread over 10 years, it comes to 40 lakhs a year. And for zone B, it is 100% of the eligible value of investment, that is 6 crore minus your input tax credit, say at 5.5 crore. Spread over 10 years comes to 55 lakhs a year. So let's say that you are a nursing home and you pay GST. Then you can claim up to 40 lakhs in incentive in zone A and 55 lakhs if you are set up in zone B. Alright. Let's take the second case study. Here the project cost is 2.2 crore. Maximum claim for zone A up to 75% is 1.65 crore minus the input tax credit. Let us assume that comes to 1.2 crore. Spread over 10 years, it comes to 12 lakhs per year. For zone B, it is 100%. That is 2.2 crores minus the input tax credit. Let us assume that comes to 2 crore. Spread over 10 years, it is 20 lakhs per year. To claim this subsidy or any subsidy, Under the scheme, you can see the amount of compliance and stringency of account maintenance. For this, you need professional handholding and guidance to maximize your claims. Now, if you notice and add all the incentives of capital investment incentive, capital interest subvention, and manufacturing and services linked incentive over 10 years, it will be greater than your project cost. Let us analyze for zone A, where it's like, where you get only 30% on your capital interest, on your capital investment, 3% as interest subvention, and only up to your 75% of your project cost in terms of your MSLI. Here, if you add those three, it is 6.355 crore for a project cost of 5.5 crore. So this is much larger. The government of India, I want you to observe this, the government of India is incentivizing performance. And you can see that the MSLI, that is the manufacturing and service linked incentive component, is the largest at 4.125 crore. I want to highlight once more that you can make a successful subsidy claim only if you meet all compliance requirements, good detailed project report, maintaining proper accounts, good construction and purchases, timely completion, professional project management. This can only be achieved with the right ecosystem. Unnati Foundation and its partner service providers do exactly that. Call on the number given in the ticker or write to us at contact@unnatif.org. In the next topic, we introduce the Unnati Foundation's ecosystem that will help you make your dream project a reality. Thank you, and I will see you in the next video.